You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Our next conversation is with policy professionals giving their unique perspectives on the current regulatory and legislative policy issues that are being currently discussed in Washington. Help me welcome our moderator, the president and CEO of the Security Traders Association, Jim Toes, and their panelists, Jameel Aalim-Johnson from Nasdaq, Greene from SIFMA, and DeMaio from FINRA.
Well, welcome everybody. Before we start, I just want to thank OIC and everyone at OCC for congratulations on a successful event. You're in the home stretch now. You can kind of relax. Obviously, we know what kind of goes into pulling off events like this, so it's not lost on us how much effort you put into it, and so congratulations to you all. Listen, before we start, we're going to go down the row here and have the panelists do the self-intros, and then we'll get going into today's topic, okay?
Morning, everyone. Jameel Johnson. I'm the Vice President in the Office of Government Relations for Nasdaq. I've been there for about 14 years now.
Hi, I'm Greene. I'm a Managing Director of Equity and Options Market Structure at SIFMA, and also have primary responsibility for the Consolidated Audit Trail.
Hi, everybody. I'm DeMaio. I'm an EVP at FINRA. I handle the Options Regulation Program, and I also handle the Trading and Execution Exam Program. I've been there 19 years. And before that, I was an options trader, a failed trader, which is why I became a regulator.
That's right. And I'm a failed trader, too. That's why I'm in an association. So that's good. Listen, broadly speaking, I think when we look at how changes come about to market structure, they're usually the result of one of three things. It's usually competitive pressures, regulatory initiatives, or legislative action. So obviously this panel, we're going to be addressing the latter two here. We have a lot of Washington, D.C. experience up here, which means that no matter what question I ask, it doesn't matter because they're going to give the answer that they want to give on this panel. We intentionally have Greene sitting in the middle here, just to kind of give you a visual here, because we have Jameel works mostly on the legislative side, working with the House and Senate Banking Committee. DeMaio obviously is on the regulatory side on the end here, and there's always that line between those two forces, and that's kind of where Ellen lives her life, kind of going back and forth between the regulatory side and the legislative side. So I think she'll be able to give a good bridge between the efforts that go on both. We're going to divide our conversation into two broad categories here. First, we're going to kind of pick up on some of the themes that were brought up on the previous panel on cyber and consolidated audit trail. And then second, we're going to talk about, really where the panelists, where their worlds interact or intersect or collide with the chief regulators that we deal with, the SEC and the CFTC. So let's get going here. So, I think the last panel, was obviously a lot on cyber, and I think we all would agree that with the exception of a market systemic outage in our markets, nothing puts fear into investors more than some type of a hack, whether it's a crypto dollar, a wallet being hacked and losing some cryptocurrencies in it, or being hacked and having some personal identification information being stolen. So we're going to first start with the cyber, and why don't we start with you, Jameel? On obviously with the House, this is obviously a focus for them, and the Senate and the government. You can just kind of share some of your thoughts on what's going on there as far as what they're doing to protect us here.
Well, thanks, Jim. I appreciate that. And like I said, this is really a good segue from the last panel. And just before I go into it, I want to mention to Andrew that he's only caught me on the social engineering once. Only one time did I not hit the phishing button when I should have. And I got to admit that the timing of the email from InfoSec was perfect, because I had just done something and they responded, but it was the wrong response. All right, you got me that one time, never again. I'm holding on to my job. But we're talking here at this conference really about high finance. But as you know, there are still people who are afraid to do basic online banking because of cybersecurity concerns. And so, the House and the Senate are very concerned. It's one of those few issues that are very bipartisan. And so members on both sides of the House, both bipartisan and bicameral. So, for instance, you have S-3600, which is the Strengthening American Cybersecurity Act that was put in as part of the FY22 Omnibus Act. And that is really a reporting requirement for covered infrastructure, critical infrastructure that experiences a cybersecurity bill. And it's kind of an update to CISA. You have the Better Cybercrime Metrics Act, which really focuses on having the FBI report metrics on cybercrime bills. And that was actually just passed. Today is the 9th. No, what is today? I'm forgetting the days. But today is the 12th. It was actually just passed last week. And that is for the FBI to report, and it also requests that local law enforcement report to the FBI. So we have a better understanding, just like we have other crime statistics, that we have a better understanding of happening with cybercrime. June of 21, the House passed the Corporate Governance Improvement and Investor Protection Act. That's really an ESG reporting bill, a very extensive ESG reporting bill. It's not going to happen in the Senate, but a lot of what you see taking place at the SEC is along those same lines. And in that particular bill, what it asked issuers to do is report on what do their board members have in regards to experts on the board in the cyber issue. And if they don't have an expert, what is their plan to have that expertise? As we all know, the president just passed an executive order to strengthen cybersecurity issues across all agencies. And the big thing, obviously, that we're dealing with right now is that the SEC has put forth its proposal on cybersecurity reporting. And for those people who have to deal with it, like the last panel, it's a bit controversial because they're asking for you to report within 4 days anything that is material. But as many of you know, if you're working with law enforcement, many times they will ask you to keep it quiet for a period of time while they investigate so that the perpetrators won't know that you're on to them. So you're going to find the SEC is going to get a huge amount of comment letters. I know that we've done one at Nasdaq. I know the Business Roundtable has done one. The Chamber is working on one, concerned about the fact that the SEC seems to be not exactly in line with the law enforcement on that reporting side. I mean, obviously, we want to do what's best for investors, but the best thing for investors is to stop cybercrime.
It's interesting. We always talk about, with our members that, often, obviously, a lot of bills don't make it to the final stage of becoming law. But it doesn't mean that the bills being drafted themselves, there's no value to be had from them. And this obviously is a way to communicate, build consensus, and to get regulators to maybe move in a particular direction without having to have, a legislative action on it. So these bills, even though some of them don't become law, they're still very important in the overall process on it. Gene, let's shift over to you. So, obviously, I know FINRA does a lot in the cyber area, but, this is obviously an options crowd here. So why don't you talk about the number one issue on your plate as far as cyber and as it pertains to options?
Yeah, thanks, Jim. So the primary issue for us on the options side have been account intrusions. This is not something that's brand new by any means. We've seen some instances of account intrusions for many years. But it's definitely something that's popped up in frequency over the last 2 years. Some of that, I think, is because of the volatility in the market over the last couple of years. Also, during the early period of COVID, markets really widened out, again, probably due to volatility. And it's given hackers a real opportunity, especially in out-of-the-money options, in very wide markets, to take advantage of the situation where they can hack into a customer's account or perhaps use their stolen banking information and create an account for a customer. And then what the hacker does is that they do what appears to be a legitimate trade for their own account in, for instance, a worthless option. So they'll go into the open market, pay 10 cents for an option that's worthless. A market maker will take the other side because it's a good trade for the market maker. They're doing their legitimate service. Now the hacker owns an option for 10 cents that's worthless. They use the hacked account, the customer account that they broke into or that they established with the stolen information, and they force an order to buy for $4.90 in a $5 wide market, and they trade against that. So the customer now has purchased at $4.90 a worthless option that the hacker purchased for 10 cents. That's just a very obvious example. However, you'd be surprised at how often that is the scenario that we actually see. So we've developed a program around looking at these instances, this type of activity. We built out a surveillance report, and from that report, we've been sending report cards to firms. So you can go into our information center at FINRA, and you can pull down a report on intrusions and see where your firm stands. And this is both in terms of whether it appears that your firm has been hacked into or if it appears that you're housing a hacker. Okay? And we're, of course, looking for firms to take some sort of action to some degree to try to protect the integrity of the marketplace. We understand that it is a very tricky area and that at times customers help this issue happen by using the same password for, let's say, their Walmart account as they use for their broker-dealer account. So once there's a breach somewhere, this information is going to be, since it's been recycled, it's going to be tried by hackers across every type of account. And it makes it easier for a hacker to break into a customer's account. Right? So we understand that that could be a problem for firms. But to the extent that there's some controls you can put in place, run a surveillance program internally, for instance, perhaps if it's a very obvious scenario that would look like an obvious error, perhaps, maybe there's some controls that can be put in place before that order actually goes to the marketplace. Right? So these are the kind of things that we've been trying to emphasize with firms, try to give them some increased awareness. But we've seen literally thousands of these instances since the beginning of COVID over the last 2 years. And since most of the hackers themselves are not within our jurisdiction, we're forwarding that information to the SEC so the SEC can take action. But literally millions of dollars in potential harm. What I will say is that most of the firms have been very interested in our thoughts and have been trying to take steps internally to do what they can do to try to at least stop this to some degree. And so we've been working with Ellen and folks over at SIFMA. We've been working with STA and just trying to meet with firms, get out in front of the firms, and have these conversations and let them know what we think effective practices might be. And again, the firms have been very receptive.
Yeah, and Jean, as you indicated, we have done a lot of work with both the retail firms as well as the market makers. And, you know, I think one of the things that's really critically important that we hear from our members is they really make significant investments in their systems to try and prevent these hacks. And even with these investments, it's really, unfortunately, there's no way that you can prevent all of these occurrences from happening. But I think what's important here is that we really need to see investments made across each broker-dealer in the industry, because I think if we don't have that same level of investment and firms really have that dedication and commitment to strengthening their systems, you know, I think as we see with a lot of things, it's a weak link that makes things vulnerable. So, you know, I know from speaking with our members, the investments they make, the time that they spent on this, the personnel they have engaged, and I would really just hope that, you know, if firms aren't doing this today, they do meet with FINRA and speak to them, because I think from what we've learned in our conversations, you have a lot of of good information that you're able to share with the firms about this.
Yeah, that's absolutely right, Ellen. And we're very willing to speak to any firm at any point in time about these issues. And it's not with an eye toward taking action against a firm. It's with an eye toward stopping the activity to the best extent that we can. And to Ellen's point, we realize it's almost impossible to stop all of these. But if a firm is doing nothing, and if a firm that's housing a hacker is not vetting these accounts at all, and they're just allowing them to be opened, and they shut down one account, but then it pops up in another account with the same IP address, that sort of thing starts to look bad. So you want to make sure that you've got a program in place to look for this stuff, and that will give us some comfort level.
I have one follow-up question, too, for you. And this, as far as, I know you did mention, you're seeing thousands of them. But can you kind of put that in perspective as far as maybe how many of these cases were you seeing 5 years ago versus how many you saw last year? And also, are you identifying the behavior before the act before the broker-dealer, or is the broker-dealer, can you kind of give a sense of are you getting better information now, maybe through a CAT, which obviously segues into the next question. So if you could answer that'd be great. Make it easier on me. But just idea around numbers around data, and also you catching it. You talked about the teamwork between FINRA and the broker dealers on trying to get this right. Just put some comments around that as far as how those conversations. What's a typical conversation on it?
Yeah, sure. So I would say 5 years ago we saw in the tens, maybe 10 a year, 20 a year. Very small numbers. And now, like I said, it's in the thousands over the last couple of years. So there's really been an increase in those numbers significantly. As far as our data, we are using CAT for this report that we're running. And it's been a tremendous boon for us to have that CAT data and be able to do things, for instance, at the FDID level, whereas in the past we were at the clearing level only. So now we can go a step up. And later on, when we have CCID information, we'll even be able to go a step higher. So that will be enormously helpful. We are not seeing it, though, before broker-dealers at all, because the broker-dealers have, of course, immediate access to the order information that's being put into their systems. So it is possible, thinking about controls that would be akin to market access type controls, that firms could put something in place to try to identify these instances up front and perhaps, as I mentioned before, even block some of the orders before they would go into the marketplace where it's very obvious that this sort of activity could be at play. And as far as the interactions with the firms have been very receptive. There's been that interplay between us, and I feel very confident that most firms are taking this very seriously. And, some of the firms have their own roundtables without us, which I think is fantastic, where they can share ideas and thoughts. And they're not looking at it like it's a business thing, right? They're actually trying to help each other and share compliance and regulatory information. And then coming to us as a group and having the conversations that Ellen mentioned before, where they can ping us and say, well, what about this? What do you think about this? What's an effective practice? And when we have these calls, we're being asked 20, 25 questions on a call, to the point where I feel like I'm out of breath by the end of the call trying to answer the questions. So I do think most firms are concerned and have the appropriate level of concern. But certainly there are some firms out there that aren't doing enough, and that's why we still see a prevalence of these.
That's great. This obviously is a very important topic for the whole credibility of the marketplace, so thank you for the work you're doing in there. Ellen, why don't we pivot to Consolidated Audit Trail, CAT? I mean, obviously, SIFMA has an enormous amount of resources and attention on this, really playing a leadership role within the industry. I know, your boss, Ken Benson, had a note out this morning on it. Big day coming up in July, so I want you just to talk about CAT and what you're doing in there.
Sure. CAT's something when I first joined SIFMA, that was one of the reasons that I was brought in, as well as to staff the Listed Options Trading Committee, which obviously has been the funner part of the job. But, first time I went and had a meeting with FINRA on CAT, it was actually a couple days before I started at SIFMA. and we met with folks at FINRA and just talked about the collection of data and everything that it would contain. And I think, as everyone in this room knows, CAT actually launched 2 years ago in July 2020, following the rule being finalized in 2012. And this July, as indicated, CAT will begin the collection of the customer and account information system, which is going to collect the PII, or personally identifiable information, of every investor and every institutional investor. So, clearly we have a lot of concern about this. We just heard a full panel on cyber. We've heard other concerns about cyber. And once CAT is completed, it will be one of the largest databases ever built, and it just will have an absolute treasure trove of information and a lot of potentially vulnerable information too. The way that CAT has been designed by the SEC, it's operated by the 25 SROs, the exchanges, including FINRA. And the way it works is once broker-dealers submit that data to CAT, really the control of that data is out of their hands, and the data is resident in FINRA's CAT system. And one of the things that SIFMA has advocated on for many years is the fact that CAT includes this PII information, and we were able to work with the commissions and the SROs to create a mechanism so that the Social Security number doesn't need to be included. And we have the customer ID that Jean referred to, which will link all of the orders that come in to the actual investor. And, again, given that amount of information, SIFMA really thought that it was important that changes be made to the rule, because as it was written, each of the SROs has the ability to download that data into their own system. And similar to a phishing attack or the hacking, that data is really vulnerable at its weakest link there. So we had worked with the commission, and back in 2020, then Chair Clayton proposed a rule on CAT data security, and which included some very important provisions, including the prohibition of bulk downloading of data and ensuring that firms would work in a secure analytical workspace that was resident within FINRA CAT, so that data did not have to come out of it. Given that the customer system is launching this July, we really think it's incumbent on the SEC to finalize this rule. I don't think anyone wants to see this data get hacked, and the way that it is right now, there are a lot of concerns. We had seen some congressional legislation from Huizenga and Loudermilk to try and protect CAT, make it safer, narrow the scope of information. However, as we've discussed also, a lot of legislation never makes it through to fruition. But clearly, I think the federal government recognizes, the SEC, it seemed, in the proposal recognizes the significance of this. So, we really think it's incumbent upon the government as well as the commission to finalize this rule, ensure that the CAT data is safe before the customer system goes live in July.
Obviously, we want our regulator to have the information that they need to do their job and to perform surveillance on it. But this has been something that we've worked on for a long time, and obviously the information that's in these databases is pretty juicy stuff for nefarious behavior and bad actors to get their hands on.
Yeah, no, and that's really important, because I think a lot of the focus is on the PII. Yet our members, with institutional customers, have a lot of concerns over the value of their algos and what could potentially occur if someone were to hack into that data, see the connections. We've heard firms talk about front running, side running, other ways that you could potentially use the CAT transaction data and along with the identifiers to really try and manipulate the markets.
Can I comment on CAT data for a minute, Jim, real quick? So I just want to note that the CAT data, especially on the options side, has been a complete game changer. Because for options in the past, we were limited by the consolidated option audit trail system, which gave us execution level data only. We had no order information. So the fact that we only had that level of information, we had to kind of reverse engineer our patterns to work upstream and try to identify problematic activity, which meant we were going out to firms that had nothing to do with the violation to try to get information about who further up the chain might have been involved. Now we can really directly target a potential bad actor, a firm that might have a violation that occurred within their systems. We can identify firms quickly and not bother firms that were not actually involved. So it's a complete change of our program, and we're rebuilding our surveillance reviews to now better use that information, go in and use the firm identifier, as I mentioned before, the FDID, and later on, once we have the customer identifying information, we'll rebuild our reports a third time to be able to use that information.
Great. All right, so we move on to our second general topic here. I mean, all of us, in our roles, we're dealing with the very ambitious agenda of Chairman Gensler. And, we identified a few areas in our prep call where each of you, are working on a particular issue that is really interacting or colliding with the chair's office here. So, Jameel, let's start with you on this particular topic. I mean, you've been on the Hill for, a good amount of time, a long time, financial services the whole time. You were a staff member for Congressman Meeks before you came to Nasdaq, and just found out earlier at our breakfast here that you're actually in your role at Nasdaq. It's an international job that you have, so you're dealing with a lot of other countries in your role there. So let's talk about crypto a little bit and some of the things that are being done on the Hill in this area. If you could kind of, obviously this is like a crazy, strange times that we're in right here, but it's also like from a historic perspective, this is a pretty historic events that are going on with this asset class. So maybe you can kind of give us a feel on what's going on and try to put it in perspective as far as where we are in history.
Yeah, I think, obviously crypto provides, everything related to digital assets provides a whole new opportunity in the financial services space, nationally and internationally. One thing I find interesting about it in regards to the legislative process is that many times, you have hearings in which basically each side has already decided what it thinks, and it'll bring in witnesses to tell them that what they think is right. But what you're finding, matter of fact, particularly the House Financial Services Committee, has been having a series of hearings named Digital Assets and the Future of Finance. Matter of fact, there's another one coming up on the 26th of May, if you want to pay attention to it. And what you're really finding there is that even though there is somewhat of a difference between the two sides, one side, particularly I would say the Republican side, focusing on the need to maintain innovation and opportunity and not losing this industry to other countries, Democrats are very concerned. I would say they're leaning toward the concern, obviously, of how it should be regulated and that investors and consumers are not taken advantage of, the concern about it being used for illicit activities. But what you're really finding on both sides is that real in-depth trying to learn questions before looking to legislate. Obviously, it's a big field. It's new, and members typically do not want to put forth legislation that ultimately doesn't protect consumers and investors, but at the same time doesn't stop innovation, and also allows it to be an opportunity that Americans from different backgrounds can take advantage of, particularly those who've particularly been left out of the financial markets. So they're being very cautious in their approach. Now, having said that, there are also I think we've identified at least 58 bills that have been put in the House and the Senate to try to address these issues. But even many of them are not, I would not call them prescriptive at this point in time. A lot of them are, reporting on stable coins. They are making sure there aren't illicit activities. Looking for how you And how do you get more licenses, say, for banks to issue stable coins? So there are a number of things they're looking at on the edges, but there's still so much more education to be done for so many of us. And obviously, even those, in the field, as Nasdaq, obviously we do things, we know what we do, right? We list companies, so we list Coinbase. We provide trading technology in the United States and around the world. So that's something we can do. But yet there's always the issues of things like, depository issues and custody issues and so many things related to it. And, how does this deal with issues like the money supply, right? The Fed controls the money supply to try to keep inflation under control and the others. If you have a number of cryptocurrencies out there that actually become currency and things that you can trade, how does that affect the money supply? And then there's always the question of, is it an asset? Is it a security? Who's going to regulate it? And, there are always fights between our two major regulators, the SEC and the CFTC, and who has jurisdiction on these issues. So it's interesting. There's not a lot to say like the conclusions are. It's really more like you can't say what the answers are. It's more like, here are all the questions. Yeah. And the number of questions keep growing.
I tell you, I think you're really spot on with that. Just how you describe these hearings are really around, becoming educated on the topic as opposed to expressing some type of political view at this stage. And it really does show in the questions that the congressional members are asking the panelists who come speak at these things. So I think that's a very, very clear, good description on it. Gene, obviously, listen, a portion of the chair's agenda is in response to those market events around GameStop, over a year ago, and the second coming of the self-directed investor. It's impossible to talk about the events without it turning into a conversation on options and some of the different activities we saw around there. FINRA just published a request for comment on complex products and options, and I know we filed a letter. I know a whole bunch of other people did as well. Can you just kind of maybe provide us with the backstory on the request? And obviously it's kind of early, but do you see it leading to any type of future rulemaking at FINRA?
Yeah, sure, Jim. So that in that space, in complex products and options, we've put out a lot of guidance in the past, but the regulatory framework that's in place for complex products was developed probably decades ago, and the markets keep evolving. So this was us looking to see, is this a time where we should perhaps update guidance, or is there something that we should be doing in this space? It was absolutely just a broad solicitation for comment. There is no proposal that was baked into what we put out. So, right now we're taking in all the information. We got over 10,000 comments. So we're taking that information in, we'll be reviewing it. It seems like many of the investors think that the policies that are in place now are adequate. But, we need to keep evaluating, and then we'll make some assessments once we've had that chance. But to your point, this is right on the cusp when the comment period ended, so, we'll see where we go from here. But again, I would emphasize this was just a request for comment at this point.
That's great.
Gene, I had noticed from ProShares had sent something out to their customers, which I thought was really interesting, encouraging them to weigh in. I saw there was a form letter that they had, and I'm guessing that probably out of your 10,000 comment letters, a number of them were based on that solicitation.
I'm guessing that's the case, Ellen. Yeah. I would think so.
I had been speaking with someone at FINRA, and they had indicated that shortly after that was put out, they had gotten on the first day 1,300 letters.
It was a lot.
I guess it really shows, though, the significance of that. And, I think to the point that you're making, I think when we look at this, I think you're absolutely right. I think the requirements that are in place today, people view them as very, very sufficient. And I think there's a lot of concern that, if you were to restrict access to these products, that it's really the investors who might lose out here given the benefits that they can offer.
Okay, we'll see. All right, so Ellen, let's go. So listen, I mean, we just talked about crypto. We talked about options. I mean, both areas of interest for Chairman Gensler. But rather than maybe pulling in another rule to talk about, why don't we talk about the rulemaking process at the SEC today and how it's different from previous commissions around it. I know this SIFMA again took leadership role in writing a nice letter that they invited us to put our logo on, which we very much appreciate, on 30-day comment periods. But why don't you just expand on the letter and other thoughts you have in that area?
Yeah, no, thank you. I think it's really important. I mean, we've seen Chair Gensler come into the commission, and we have seen an absolutely sweeping regulatory agenda. Chair Gensler seems to be tackling a lot of issues that could really have significant impacts on market structure, industry operations, and practices. We've seen 20 proposals this year, 12 of which impact SIFMA and our members that we've commented on. The SEC has signaled there could be as many as 50 proposals this year, and I think as everyone in this room knows, we haven't seen anything yet. While things have related to some of the market participants and the structure, it hasn't actually gotten into equity or options market structure and how the markets function. So it'll be interesting to see when we do receive that, rumored to be sometime this summer. But it's, SIFMA thinks it's really important to step back and take a holistic approach to rulemaking. The SEC traditionally would meet with their stakeholders, the buy side, sell side, and others with vested interests, and solicit feedback and really understand what problem they were trying to solve for here. And I think in a lot of the rulemaking we've seen, it's not really clear what the issue is. And, along those lines, once a proposal is made, we're typically, and some of these are very significant proposals, yet, Jim, as you indicated, we've seen, initially 30-day comment periods. And SIFMA worked with 25 trades to submit a letter to Chair Gensler. We also lobbied up on the Hill, and a letter with 47 signatures was sent over to the SEC, really appealing to them to go through their process, to follow their own procedures here, to really ensure that rulemaking is being done in the way that it was meant to be done. And, if commenters don't really have the time to go through the proposals, perform a proper economic benefit, it's really difficult to see, what those potential benefits could be here. And likewise, once the comments are made, the SEC really needs the time to go through those letters, do their own economic analysis, and then really determine what the next step is. And given the significance of these, it seems the next step could be reproposing them. Certainly the SEC put out their proposal on Reg ATS, and interestingly just reopened the comment period. And I think a lot of folks speculate that given the complexity between that proposal and the dealer proposal and some of the interrelated issues, perhaps the SEC might have even overlooked some of that when they were putting that out, and is now, rightly so, giving the industry more time to comment on that and take into account some of the proposals in that dealer proposal there. So, I think the important thing here, though, is that the SEC seems to have this very aggressive agenda, but as we've discussed things like the CAT data security proposal, we know there are a lot of other things that they've been working on which just seem to have being pushed to the side while the commissioner pursues his agenda here. So, I think what we'd like to see is for the SEC to take a pause here. Fortunately, there haven't been any proposals. I think actually this might now be the 4th to 5th week we haven't seen anything. We're seeing now reopening of comment periods, longer comment periods. So, who knows, perhaps Chair Gensler is taking a step back, but again, we do want to see them prioritize this, complete things that have been started that are critically important, and then move on to this rulemaking and hopefully, allow the industry to engage in ways that I think provide so much value.
That's great. Jameel, I'm going to have you bring us home here and get the final word. And a lot of what Ellen has described here would kind of fall under the the Administrative Procedures Act, right? And just, that regulators have to follow a certain guidelines when they do rules. I mean, in your conversations with staff on this, I mean, do you get any sense of common themes as far as how they feel the commission is going about? I mean, do they at least acknowledge that this chair is behaving differently than previous chairs? And do they voice any concerns or around how he's going about it, and anything around there, that feedback that you've been getting on it?
Yeah, well, I think when you say you get feedback from staff, well, it always depends on which side of the aisle you're talking to, right? So let me give you, for instance, if you take the bill I mentioned earlier, H.R. 1187, the Corporate Governance Improvements and Investor Protection Act. What's in that bill on ESG disclosures includes things like climate, workforce protection, cybersecurity disclosures, diversity, and about, I think, political disclosures. The SEC has already put forth proposals matching those things on climate, on cyber. We know that diversity is coming. We know workforce is coming. So on those sides, you're seeing a parallel, particularly between these democratically sponsored bills, and you have a Democratic commission. The time on the flip side, you get a lot of things from Republicans, including letters they have sent, particularly related to the response, the time to respond, the comment period, and how short it is, and how we. Clearly there's, a thought process on the part of the SEC and its leadership on what it wants to accomplish during its time period, and it's looking to move those forward and move them quickly. But the fact of the matter is, as Ellen said, there's a lot of complex issues here. We just recently did a webinar with a number of our listed companies on the cybersecurity and the climate disclosure. That climate disclosure is very extensive and very deep. And it's going to take a lot of time for companies to look into it. And remember, not all companies are, American Airlines or Google or so on and so forth. Some of them are small issuers, and they really don't have as many lawyers or experts on these things. They really need more time to develop the expertise and understand how it's going to affect them. And I think that, it's been good that the SEC has recently decided to extend the time period on the climate. But I think what you're getting from staff and from members, like I said, depends upon the side of the aisle, is that, yes, this is the direction that we want to go in. Elections have consequences, right? This is the direction that we want to go in, and we think that on one side, this is the right direction. The other side, it's moving too fast. It's not focusing enough on capital formation. Yeah. We'd like to go back to that kind of an agenda. But it is, the issue of elections have consequences, and when you in power, to the victor goes the spoils, right?
That's fair enough. Fair enough. All right, so we got 2 minutes. You want the question, or you want to just cut early to the break?
I did want to mention one thing that we had talked about before. You talked about the GameStop hearings and a number of issues that came out of it. And one of the things that, this crowd should be concerned about was there was a discussion draft on reporting losses and options, right, that, have undoubtedly well attended. But, us, the OCC, working with our friends there, talked to a number of members and staffers about that issue. And we think it was really important that, when you talk about reporting your clients' losses, it's kind of hard to understand exactly what. Information disclosures are important, but they should be useful to the investor, particularly when you're talking about a 20% jump in retail investment during COVID. So what do losses mean? And so if I, put in a call option, and I'm not explaining anything to anybody here they don't know, I do a call option. Because I think the price of a stock is going to go up and I want to be able to buy it at a certain price. It doesn't go my way, so I decide not to exercise the option. Is that a loss? Well, all right, maybe I spent $200 on the option, but to buy the actual amount of stock might have cost me $5,000, right? So did I lose $200 or did I save $4,800? Same thing in a protective put. So, talking to the staff and trying to get them to understand actually what options are for. Every year, I have to pay insurance on our cars. I hope not to use it. So I just give the insurance companies money year after year, of which they don't have to do anything for. But that's actually what I want to happen. Now, if there is an incident, I need them to pay me, but options many times are the same way. They're a way of making money, but they're often a way of hedging. So is a hedge a loss, or is it what you want?
Yeah, that was like there were 5 bills that kind of came out of the GameStop hearings, and they were 5 bills that then went down to 2 bills and 2 studies, and then they did completely shelve the option one. But the feedback that we got on that was basically, Jimmy, listen, we're not even gonna make this a study, but don't take any comfort in that because we're really looking in this options area. So there's more to come in that area.
There's no permanent victories in Washington.
No.
It's very much like every bill is Freddy Krueger, it's Jason, it's Michael. It'll be back.
Yeah, it'll be back. Yeah. All right. Well, thank you very much, everybody. Congratulations again to everyone. All right, thank you.
All right, folks, we're going to take a short break, and our program will resume promptly at 10:30 a.m. for a fireside chat with the Honorable Don DeBerry Stump and OCC's Julie Bauer. We'll see you shortly.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.